We are well 2 months into the festive season, and consumer durables is one sector that has its hopes pinned to. While the overall volumes have declined in July and August this year, the channel build-up towards the end of September is expected to support the growth for Q2 of FY23. The recent channel check suggests that inventories are now at normalized levels. Also, the premium categories continue to fare better versus the mass segments, which are grappling with high inflation and price increases. This means that demand from rural as well as entry-level segment remains subdued. Let's go through the segment-wise performances expectations. With Q2 of FY23 being an off-season, the AC volumes may not be significant in this quarter. Voltas revenue growth is expected at marginal 2% on a year-on-year basis, which is primarily led by higher realizations in unitary cooling products division. However, the margins could see a contraction of about 100 basis points. For Blue Star, though, the market share improvement, which is led by distribution expansion and product portfolio revamp over the last year, would support the outperformance. The top line of Blue Star may jump by about 20%, with stable margins expected in Q2 of FY23. Now moving on to the small appliances segment. A slowdown in demand for fans along with continued weakness in pumps would result in sequential revenue decline for Crompton Greaves in its electrical consumer durables division, while the lighting revenues is expected to witness low single-digit growth. For other segments like lights and switches, some value growth can be expected. Havells India is expected to maintain its outperformance versus its peers with strong revenue growth momentum in switchgears, lighting, electrical consumer durables. But the EBITDA margins could see some contraction due to cost normalization and inflationary trends. For contract manufacturers like Dixon Technology, the revenue should be supported by volume growth in televisions and washing machines. The PLI-led scale-up in the mobile, telecom and IT segments would also add to the revenue growth. But for Amber Enterprises, the volumes would be impacted on account of high inventory levels with select brands. The lean period for cooling products is likely to weigh on Amber's top line. To summarize, the festive demand in October this year will be a key monitorable for the consumer durables industry, and the partial benefits of the cool down in commodity prices is likely to benefit margins, but the full effects will flow in only third quarter onwards.